Hi everyone, welcome to practice problem Receivable-05. This one is about third-party collections of your receivables. So here we go, one problem, it's a little bit long, but there's a few different components going on. Tiger Inc.'s customers charged $50,000 worth of purchases through national credit card companies, which collect an average fee of 2% per transactions. Their customers also charged $30,000 worth of purchases to their Tiger Inc. accounts. However, instead of maintaining its own internal collections department, Tiger Inc. sells its receivables to a collection agency for a 1% fee. So two different ways of involving third parties in the collection of your basically sales revenue. Record the journal entries for all customer purchases and Tiger Inc.'s subsequent use of the collection agency. Determine the overall impact to Tiger Inc.'s cash balance and net income. All right. Take a moment, pause the video, start with the journal entries, then ask yourself, well, what did this do as far as my cash balance and my net income versus the alternative of Tiger Inc. doing it all themselves? All right. When you're ready, come on back. I'll walk you through the solution. All right, welcome back. So I am going to start with the national credit card purchases. Now, in the case of companies charging money through a credit card, as far as Tiger Inc. is concerned, that is the same as receiving cash, and specifically $50,000 worth of cash, or at least so it would appear on the surface, right? You're selling stuff to your customers, so sales revenue, $50,000. And if Tiger Inc. did everything themselves, this is what they would get to record, right? We received money, we have sales revenue of $50,000. However, those national credit card companies are charging a 2% fee per transaction. So what this ends up doing, if we pull up my calculator, we've got $50,000 times 2% works out to $1,000. Tiger Inc. is actually going to incur a cost of $1,000 in the form of a service fee for these collections. How are they going to pay it? Well, the national credit card companies simply aren't going to give them that portion of the money. And so this is the actual journal entry when using the national credit card service. Cash, you're only getting 49 of your 50,000 because you're getting charged 1,000. You still get to record sales revenue of 50 because you did make a $50,000 sale. However, from an income statement perspective, it's going to get offset by this $1,000 service fee for a profit of only $49,000, equal to the cash you received. Now, let's deal with the sales that were made on Tiger Inc. accounts. So on Tiger Inc. accounts, you would record accounts receivable from your customers. Now, in this case, it was $30,000. And you'd record your sales revenue, $30,000. Now it says, subsequent to this, Tiger Inc. sells its receivables to a collection agency for a 1% fee. So upon sale to the collection agency, you are going to get the cash, you're going to get rid of the AR because you're not maintaining it, and we're paying a 1% fee this time, which works out to $300. Yeah, $300. The service fee, $300. And that service fee, of course, is going to reduce the cash that you collect from that collection agency. So you are only going to get $29,700 in cash. Okay? So notice in both situations, the same end goal is happening. Instead of you simply getting AR and subsequently cash for all of what you charged customers, in both cases, ultimately the cash you receive is reduced. It is reduced by the amount of the service fee that the company is charging you. That service fee is going to offset the sales revenue on your income statement. So your income is going to be lower as a result of using these services. And the cash you ultimately receive is going to be lower as a result of using these services. The only difference between the national credit cards and the subsequent collection agencies is in a national credit card situation, you never have your own AR to begin with. You simply record the credit card purchase as cash, but you do take into account the service fee that has to come out of it. In the case of a collection agency, you do record your own AR to begin with, but then you turn around and you sell that AR and notice that the debits on that second portion of that transaction and the debits in the national credit card transaction, you'll notice that they're very similar. Cash received, discounted amount, charge a fee for use of the service. All right, so that's it for using third parties for your collections. I hope you found this helpful, and I hope you join me for another video.